Hi, this is Randy Finney with Right Side of the Chart, and today is Sunday, April 17th, 2016. In this video, I wanted to take a look at some Canadian stocks as well as the EWC. EWC, which is up on the screen here, is the iShares MSCI Canada Index Fund ETF. I'm doing this video primarily, I have had a request. We have quite a few Canadians on the site and those that trade Canadian equities. So the video is for that subset of traders, as well as obviously, the EWC it trades on the U.S. exchanges. So this, if you want international exposure, or you're just looking for a good trade idea, regardless of where the country is. I've mentioned that a lot of these natural resource dependent commodity countries, I should say, stand out to me as longer term. The chart's looking more attractive on the long side. Now, I'll give you my nutshell and I'll wrap this up. As I go through the stocks, I'll make the case and then I'll wrap it up again at the end. But here's my quick take. I do remain longer term bullish. I like the charts on Canada, a lot of these individual Canadian stocks. However, what I'm seeing here, there's a common theme. The strongest looking charts, when I say the strongest looking, I'm talking both long term from a weekly chart, weekly time frame, longer term history, as well as the daily charts. It seems that a lot of those stocks have already had very sharp run-ups and are quite overbought, many of those at or near resistance. So if I had to take my best guess, an educated guess studying the charts, I would say that as a whole, I'm speaking in generalities, individual stocks, there will always be exceptions one way or the other, but as a whole, I think a lot of these Canadian stocks in the broad tracking ETFs need at least some consolidation here and quite likely a pullback, and that could last anywhere from somewhere I'm looking around maybe a couple months, ideally. So I do think this video is worth doing because there are a lot of key technical levels to watch and some stocks to put on your radar, which I'll go over today. Some may even be actionable, and ultimately my analysis might be wrong, and maybe these stocks are going to continue higher and punch up through these levels and just burn through these overbought conditions. There has been a little consolidation recently, so I'll share the charts. And as time goes on, I'll also continue to study these further. I haven't gone through every component of EWC today. I'll go through some of the top holdings by market cap, and then we're going to flip it around and go through some of the highest yielding stocks, because that's also been one of my common themes through 2016 and will be going forward. We're in a near zero interest rate environment, pretty much around the world, and dividend stocks, I think, have a place in their portfolio. Now, just to wrap that up and to stay on that point that I'm talking about, I had one person from Canada. He said he's trying to help his mom find some income ideas because there's really no money to be made at the banks. Keep in mind that the only thing worse than not making money is losing money. So sometimes you can't force the market. If I am correct, and the Canadian equities are due for a pullback that's going to go on for a couple months, it's going to be very hard to make money anywhere. As the expression goes, all ships are lifted in a rising tide. Well, the inverse holds true. When the tide falls, meaning the broad market goes down, typically all stocks fall with it. Again, there's always exceptions, and that's what I do. If I see anything that stands out as a long side trade candidate, I'll be sure to post that. So let's go ahead and dive into these charts. And again, if you have any questions on any of these individual names or any others, go ahead and post it in the trading room, and I'll be glad to give you my thoughts. One quick point to add, I am going to go ahead soon and add a group in the trading room, a dedicated group for the Canadian markets. In other words, any Canadian stock setups, Canadian exchanges, looking at the TSX, any other the venture exchange, any of the Canadian exchanges, articles, links, anything. So that will be coming up soon, and I'll keep you posted on that. So let's go ahead and get into the charts here. Now again, EWC trades on the U.S. exchanges. However, if you're Canadian, I'm sure there's a similar ETF that tracks, I would imagine, the MSCI Canada Index Fund. Just talk to your broker or do a quick Google search. Now I'm using this because I can easily pull, when I type in EWC, I'm going to move this onto the screen here. on my TC2000 charting program, I have a list of related items, and what I'm going to do is sort these first by market cap. Let's start there from largest to smallest. You can see this column right here is market capitalization, starting with $6.1 billion company. I'll go over some of the top names in the sector, and then we'll flip it around and we'll look at some of the high yielding stocks. All right, so before we do that, let's finish up on EWC, and I'll give you my thoughts here. First and foremost, we have this downtrend line, and I am on a daily time frame. If I don't indicate, just look up here next to the symbol. You'll see the time frame. It'll either be daily or weekly is what we'll look at today. So we have a downtrend line coming up, and although we still haven't had that third reaction, I would expect it here. Not only that, even if this downtrend line doesn't come into play, which I think it is likely to, based on where all the individual stocks are right now, taking that into account, a lot of those are approaching resistance or already at resistance. We do have a pretty nice horizontal resistance level here around 24.76. And you can see here on the volume at price histogram, the green and red horizontal bars, we have that nice gap right there, a thin zone, I should call it, a thin zone. So I'd expect the EWC to find resistance here. We're just shy of it now, you can see, and I have a couple other lines I'll highlight. So if and when, this would be the break point right here. And this could happen sooner, but my expectation, once again, is for another thrust down before then. But once both of these levels, the 24.76 and this downtrend line, are taken out, there really isn't a whole lot of resistance there up until this next level at 26.42. So to quantify it, that is about almost a 7% gain. And then each of these are additional resistance levels on there. And if you have any questions, I didn't list the levels here, but you can replicate this on your chart. Let's see. So what I could, one possibility, again, I mentioned overbought. If we go down to the bottom here, take a look at the RSI, you can see we recently reached that, level of 70 or above, which is oversold. And also note this divergence that I've drawn here. Let's get rid of this line, this box. Okay, you have the divergence here. We do have a bullish cross, but I can really zoom in, and I would almost expect this MACD, although it looks like it's made a bullish cross, to probably cross back down and turn back over. It hasn't done so yet, so that's not what I refer to as confirmed divergence. We need to see a bearish cross down now, and I'm referring to the posture, the PPO here is what I'm looking at. Actually, I can put a MACD up on the daily time frame is what I should do here. They're very similar. You'll see the same story. There's the MACD down below, I should say. And now the RSI is up top. Let's fix that. Okay, so we'll watch for a bearish cross. And one thing you can just make out here, if you look close enough, that blue line on the MACD has crossed through, but it's not pointing up. And usually when you see that, you see the bullish cross, and then it's already flattening out and turning down. That tells me I'll probably get a false bullish crossover right there. I don't like that type of MACD crossover. I'd like to see more impulsive bullish action, like back here. You can see the blue line, the MACD line, cross above that signal line, and it continued to move higher. It's pointing up as we did back here. That's usually the case. Sometimes you get those wimpy little crossovers that don't play out. So if we do roll back over, meaning if prices come down anymore, that MACD will roll back down and confirm this divergence. You have the divergence right here on the RSI, with the RSI turning down versus prices making a higher high. So my one scenario here, if you look closely, you have the makings of a inverse head and shoulders bottoming pattern, which is, that's an inherently bullish pattern, as the name implies. It's a bottoming pattern, and so that would be your left shoulder. You can draw a head right here and put that down at the head. And this would be the formation, well, we're looking at possibly the formation of a right shoulder. So should prices move down from here somewhere to that area, I like to see symmetry, and that is part of a head and shoulders. They don't have to have perfect symmetry, but the better the symmetry, the more likely it is to play out. So that would be one scenario there. You come down, form a right shoulder, and then ultimately, come back up, finalize that right shoulder. This would be your neckline here. I'll draw it out for you. Just label this. Oops, typo, neckline. Okay, so the horizontal line that I mentioned here, which whether or not a head and shoulders pattern does form here, that is resistance. And if we do put in a right shoulder and prices move back up, finalizing that right shoulder, then that will become a neckline. This will be a head and shoulders pattern, and that, this will be the level to watch for a breakout, and that would have longer term bullish implications. I've highlighted here, if you notice this expansion in volume, these white volume bars, one of the criteria for a head and shoulders pattern to confirm it with volume is you want to see volume expansion on the formation of the head. So from once the peak of the head is made, you see that move up, you want to see volume expansion. If we do come back down, you'll want to see a tapering off in volume, and then on the finalization or the final part of the right shoulder, if and when we put that in, you'd want to once again see volume expansion. So draw it here, right shoulder. And again, one possibility, very early in the pattern, so you don't get too excited, but it does sort of mesh with my expectation just on my read on the charts for a pullback. And again, most importantly, we're at dual resistance, downtrend line, possible downtrend line resistance, and horizontal resistance. So pullback I would view as healthy longer term price action. Obviously bearish short term, and this is why, again, I wouldn't be chasing a lot of these stocks right here. So something to watch for. And let's just take a quick look at the weekly chart. You can see here there's that downtrend line, or really what I call potential downtrend line. We haven't had a third reaction yet. I like to see, I can take almost any 2 points at random, but it's usually that what I consider the third reaction. In other words, we have to hit it, pull back. Maybe I can play around with this. It's a weekly chart, so we might be even closer to it than I had it drawn there. And what else? Oh, the PPO down here, note that that's still in bearish territory. The white line on the PPO, typically when that's below zero, that denotes a bearish trend or a bear market. And you can see it back here from this point to this point. We pretty much slogged around sideways for about a year, but you might not have wanted to have been in the EWC or the Canadian stocks. And then it got above that level and stayed above there till this point right here. And so from where I'm putting the crosshairs, I'm doing a rough estimate of where that line crossed. Well, we can get pretty close here. So call it almost the beginning of December of 2014. By that metric, by that one trend indicator, it said we were in a bear market in EWC, and we still are by quite a bit. That white line's well below. So coming back up here, sometimes that white line, like it did at this point, or in that case it was actually the PPO line, back tested the zero level and rolled back down, confirming that the downtrend was intact. So right now the red line's testing the PPO line, and we can still have the 90 MA. In other words, we could still be in a bear market. Obviously Canada has been in a bear market. The US, some of the indices haven't hit that 20% drop yet, but I'm measuring from the highs to lows. There's about a 45% drop in EWC. So, Canada has clearly been in a bear market, largely because of the bear market in commodities. And those are some levels to watch. So right now the trend is still bearish until proven otherwise, but I do like the charts appear to be firming up. Again, might take a couple months. And again, if we look at symmetry here, look at from the point this right shoulder was formed. I'm just trying to guesstimate how long it would take, and that would be somewhere around there if we held symmetry, and that would be mid to the end of May, somewhere around there, give or take, and that's why I'm wanting to hold off. All right, enough time spent there. Let's dive into some of these individual stocks, and this will kind of give us an idea of what the markets look like. All right, this is Kinross Gold. Nope, I had that backwards. I didn't have the sorted by market cap. Now I do. So we're looking at the largest market cap companies here. That makes sense. $115 billion. So one of the themes I'm looking at, the banks. The Canadian banks look healthy. They look pretty good. So, however, just like the ETF, I think a little too much too fast. What I mean by that is here we were just in February a couple months ago, and I'm just grabbing the horizontal line down at the bottom of that candlestick. We've had a near vertical run with only one major correction, and that measures out 20%. So that's a heck of a move. You can see from the bottom we had this strong move up, pullback. Now that could be construed as a flagging type action. That's a possibility. So I'm leaving, you have to leave these possibilities open that maybe this was a bull flag that occurred right under that downtrend line, and we've just broken out. So if that was the case, I'd want to measure it from actually this point right there. This would be my flagpole, and a breakout of that bull flag would take us all the way up here, probably right to that previous reaction high back there from 2014. So there's a possibility, and whether that's going to break out or not, let's move these out of the way. We did take out this downtrend line. That was bullish. We had 1, 2, 3, 4, 5, almost 6, well, really 6 there, and then boom, we went up through there. So quite a few reactions, a very valid downtrend line, and so far a nice follow through. Now I put a horizontal line here, so if you are interested in Royal Bank of Canada, there's a previous reaction high that's pretty significant. We need to take that out. If I come across here, if I put a longer horizontal line, you'll see it does capture quite a few other reactions in the past. So either way, that's a level that needs to be taken out. 77.80, call it $78, maybe over last week's high. I think that was Thursday right there. It hit a high of 77.90. So yeah, that one really needs to take out 78 with conviction. And again, you want to watch the entire market, but it has everything I like to see. It had a divergent low back here. I wish I would have caught it then. In hindsight, I say that because a lot of that divergence has already played out for a very nice move, but we did have strong bullish divergences at the lows. We've taken out that downtrend line, which is bullish. So what I'm seeing here is one bullish event after another. We had this basing pattern, sort of that W pattern that we had in some of the U.S. indices, flagging action, breakout. Now we're at resistance, and if we take that out, then that one could continue on up to, I'd say that level right there at least 81.50, and then ultimately that'd be the target. Take a quick look at the weekly chart. Looks pretty bullish. You can see the breakout there, nice bullish candlestick. You see this pattern right here, pretty well defined. That's the same downtrend line. So there's sort of a descending price channel. And PPO is still in sell territory or bearish territory, but wouldn't be much longer if we push up. So there's one bank that looks okay. Nice yield too. So if you are a longer term investor, you're getting paid to wait in that one. As long as that dividend's secure, you'll have to do your own due diligence on the Royal Bank of Canada and see how secure that is. But it's nice dividend yield. And if you went long, even if you were impatient and said, well, I like this, I think that bull flag is going to play out, you can take a long position there. But as far as an objective stop, I would put the first level. There's definitely some resistance right here. There's a reaction high, another reaction high that it took out. That's 76.12. So you could go long. That's about a point and a half, a little less than a point and a half below. You could have your stop below that level. Again, you're right at resistance. You might as well wait for a breakout at this point. Pop above, call it 78 to be safe. All right, let's go through it. Some more, a little faster here. TD Bank, Toronto Dominion Bank, big company. There's the TD and TD Ameritrade for those of you that have Ameritrade accounts. TD Group, that is. I think TD Group owns TD, Toronto Dominion Bank. Let's see here. Nice divergent low right there. But again, it's played out. It had an explosive move off that divergent low. And that was good for about a 16% gain in relatively short order, just a couple months. And I should have marked this up here. You see these reaction highs back here. Look at the gap right there. There's some reactions there. Gap, reaction highs. So that is a key resistance level. So what happened here is you had a breakout. The breakout failed for a day or two, but prices pushed back up. So that's pretty bullish. However, you're sort of trapped now between this range. And the problem, again, the stock became, like so many, so overbought that it probably needs a little room here to digest that recent run-up before it can go ahead and break above this level. And if and when it does, if it takes that level out, and again, it's just healthy to see some consolidation, whether it's sideways action or maybe a pullback. That would be your next target. And then you can see this pattern here, and this is another reason to hold off. The way I have this drawn, I probably could clean these lines up a little bit. There you go. You need to see this taken out. There's a long-term downtrend line going back from 2014, and we've yet to take that out the way I have it drawn here on the weekly chart. So A little work to be done, but again, there's a nice dividend yield of almost 4%, and that seems to be a common theme as I'm going through the Canadian stocks. Here's Bank of Nova, nice clean similar move. Again, these all look the same. I could draw it here. I don't have it. Divergent low, pop above the downtrend line. Pretty formidable resistance level that we've had numerous reactions. So this one's pinched between a rock and a hard place. Bullish if and when this level goes. It's around $64. This would be your next target. I really don't see much resistance up until that level. There's a minor resistance there around 65.15. But there's your next target, and beyond that, that would be 71.25 area. But ideally, you want to wait for a breakout of that level. But I could see this one work its way back, maybe come in for another back test of this downtrend line. Again, maybe, maybe not, but that's what I'm seeing right now. And again, nice dividend yield too, like most banks. All right, Suncor. This one has a little work to do. Here's a downtrend line. We had a little attempted breakouts here, 2 days, but you can see both of those. We never really closed above that downtrend line, or at least not by much. So we need to take that downtrend line out. And there's horizontal resistance. I really like when I see a chart and there's intersecting resistance or support levels to be taken out. So if this stock could power up here and take out that level at 37.41, then it would also have taken out this downtrend line. Now I did draw a uptrend line here. It recently broke below. Divergent high on a small scale, if you will, from right here versus price action. If you look at right here, so there is a little bit of divergence here on the daily chart, and I'm sure that would probably show up on the 60 or 120 minute chart. So that divergence might need to play out, and this would be a buy zone here. This is support right here around 34.20, or I'm sorry, 34.02, call it 34. There's actually a little support above that, so maybe even down to this level, and that is at 34.90. But again, I would personally give it a little time. At the very least, wait for a solid breakout above this level. And there's the weekly chart. Okay, I'm not going to go into too many. Here's a weekly chart of BCE. This looks bearish to me. This looks like a large rising wedge on BCE. And yeah, you can see it here on the daily chart just as well. So negative divergence, bearish rising wedge. Right at a previous reaction high, tried an intraday to take out that high. So this, to me, for those of you like shorting, this looks like a good shorting op, and I'd have to study it a little bit more. Ultimately, this would be my final downside target. I should take that back. I mean, if things get ugly and there's a lot more downside to go in the Canadian markets, then this one could come all the way back down to this level here. 52.60, but that would probably be a nice swing target there around the $56 level. BMTO, Bank of Montreal, another bank, divergent low like everything else. And I think I had the PPO here earlier when I had these drawn out, so I put the MACD back on. I'm just highlighting the divergence. There's some previous reaction highs. This is a resistance zone. If I have two horizontal lines in close proximity, I refer to that as a resistance zone. And we have taken out, you can see it took out the top of the resistance zone, so that's pretty bullish price action. And it comes on the heels of some flagging. So again, I have, I'm cautious on the sector, and I'm leaning towards that pullback, but it doesn't have to happen. Sometimes sectors can really just take off, and overbought can become more overbought, or maybe this was enough to work off. We had a move back from above 70 down to the 50 level, and now we've moved back up. So again, if I draw it here, we're diverging right now if this MACD curls back down. But if I take this flagpole measurement here, actually, let me just shorten it a little bit. There was a reaction pullback right here. So this is what it projects to. And you can see that comes right at about, we just had another stock like that, right to their previous reaction high. So maybe the banks are about to go on a tear here. The charts definitely show it on some of these with those flag breakouts. And there it is on a weekly chart, BMO. Bank of Montreal looks like a descending, broadening wedge pattern with a breakout right there. A nice, clean, big, impulsive candlestick, above that pattern. CNI, Canadian National Railway, another sort of a descending, broadening wedge pattern. This must have been an old trend line I had on there from before. And nice breakout. Let's take a look at the daily chart. We're coming up on this downtrend line on the daily chart as well. More importantly, this horizontal resistance level here, it's 63, call it 63.40, and we're struggling with that. So this one has a little work to do, and like everything else, most things Canadian, it has had a heck of a run up in the last few months, and that's almost 40% gain, quite overbought. I could draw it here if I wanted to. These two peaks, divergence against the recent prices making a higher high. So there's another one that looks good longer term, but may need a pullback, and that one might need a healthy pullback lasting a few months. Pullback targets, if you're interested. If it got down to this level, 57.25, that looks like pretty nice support. I see quite a few reactions. Yeah, that would be a nice buy point with a stop not too far below. If and when it gets there, it has some work to do, obviously, before that happens. But I wouldn't chase here. I'd give that one a little room. All right, let's look at a few more here, and then I'll flip to the high dividend yielders and wrap this thing up. ENB, Enbridge, looks like a little flagging bearish pennant type action breakout, but we have this downtrend line and we just barely broke above there. No volume confirming. I like to see, on a breakout, you want to see volume confirm, and you do not see that here on that downtrend line break, nor on that breakout of that pennant type pattern. So we have divergence, and my expectation is that breakout will fail and probably prove to be a bull trap. And this would be a support level. This is really nice support. So if you like this one longer term, I think this was a premature breakout. It'll prove to be a bull trap, so I could see that stock coming back into this 48.65 area and then going on to push up. Ultimately, again, if the Canadian markets hold up, this would be a great longer-term target here around 57.43. And so if you grabbed it there on that pullback, that's about almost an 18% move, and you're being paid about 4% dividend, 4.07% dividend yield on that one. All right, any others? BAM.ATO, Brookfield Asset Management, nice chart. CNQ, Canadian Natural Resources. There's a bull flag, flagpole, breakout. I mean, this looks great. You have this clear flag. There's the flagpole. The bull flag's drawn right there. I put that at the bottom of the flag, and that's where that would project to. So a lot of potential in this stock. And it lines up very well with these reactions right here. So that would be my target on that one, 47.27, call it roughly. However, we have a divergent high right here, and I'm not crazy about seeing that. I'm drawing, let's get the trend line out of the way, right here. Price is making this higher high, and we have negative divergence, and you can see here the MACD isn't very impulsively following through on that crossover. So I think this will fail. I think, again, what I'm seeing here, a lot of the stocks, some are approaching resistance, most are oversold. There are quite a few of these bull flag breakouts that are bullish, but some of those are on low or below average volume. And again, if you see the Canadian markets as a whole roll over, what it'll do, even if these would have normally been valid breakouts, all ships are going to go down on a falling tide. And so it's probably going to cause all of these recent breakouts to fail. So like I said, maybe I'm wrong. Maybe they continue to rip. If you want to, you can always take them here, put a stop in. But you can already see this. See how that's rolled over. When you have a bull flag breakout, the move up to the flagpole is very impulsive. You have that consolidation on low volume, which you had here. It was textbook. However, we broke out and impulsively too. But look at the last 2 days. We've fallen back so far. So if it keeps going down, that quickly chips away at that bullish case, because you want to see follow through, especially in the early stages of a breakout following a bull flag pattern. So if we come back down anymore, that breakout has failed, and fewer things are more bearish than a failed bullish breakout. So that was a bullish breakout. So we come back down. There's a gap there. It needs to hold at the very least. If not, that thing's probably going to come back here and back test this downtrend line at a lower level. And there's some nice support there. So you might have another entry. And I would say either of these two lines. My preference would be down here to cycle into this one, begin scaling into it, 33, 30-ish level, maybe allow for a back test of this downtrend line, which, keep in mind, downtrend lines, are dynamic, meaning they change every day. They go lower and lower in price. So the longer it takes to get there, if it does make a back test, it'll come in lower than that level there. And if it takes that out, there's support below all the way down here, 31.25. All right, we're going to now move to the dividend. What I've done is sorted. I have forward and trailing dividend yields. Most of those are the same. If a company has recently cut their dividend, you'll see the forward dividend yield will be lower than the trailing. So in the case of potash, we all know potash. That one trades dual. It's dual listed, and I've had that as a trade idea, and it's still a trade idea on the site as a growth and income trade. So if your preference is to buy the stocks listed on the TSX or any of the Canadian exchanges, that's a lot of these are, and potash is one of those. So here's the chart as I've drawn it with the Canadian listed shares. This looks like a bullish falling wedge pattern to me, pretty clean at that. You can see the bullish divergence if I draw it here on the RSI, and as well as on the MACD. Nice divergent low. You can see the MACD is starting to curl up, and as prices are making a lower low. So two ways to do it. You can, if you're a little more aggressive, you can take a shot here at the bottom of the wedge pattern. Sure, can it walk down the wedge a little more? Absolutely, that's a possibility. But that wedge, it's getting ripe. It could break out anywhere from here all the way to this. That would be your ideal range. There's no set limit. 65 to 80% towards the apex of the wedge typically is where you see these things break out. So, you can buy it here, scale in. But this is your first solid buy signal, is a break of this downtrend line. And then targets are marked as you see, 25.75, call it 29. 31, and ultimately over time, if this market, if the sector firms up, 36.50, that would be my longer term target on potash. So there it is. And remember, I'm sorting these by dividend yield. Be careful of chasing a stock solely for the fact that it has a high dividend yield. That often indicates that company is in trouble financially, fundamentally. Dividend yields can be cut, as pot already has been. They can be eliminated too, and they can be cut again. Just because they've had one cut doesn't mean they're not going to have any more. But over the years, I glanced at dividend history. I think it was on potash, and it's varied over the years. They cut it, they raise it. So that's not one of your steady Eddy dividend payers, but over time they've always paid a dividend, at least in recent years. So one to watch. Here's IPL, Interpipeline Fund. I've been bullish on quite a few pipeline stocks, U.S. And Canadian. And this is one that looks pretty nice here. We had a well-defined downtrend line, numerous reactions along the way. This line I'm holding here, like all things Canadian, or at least most things I'm going over, we've had an extended run recently to take out that downtrend line. So we're quite extended. You can see it here on the RSI. Like everything else, at least in the very near term, we're diverging. I won't draw it out in each and every one of these, but you can see the MACD and the RSI. Although I don't want to make too much of it. It's not a super bearish MACD. It's sort of flattening out there. That is a resistance level we're at, 2673-ish, 2675. Really look at the most recent high. If and when we clear that by, with conviction, probably headed up here to the 2970 area. And the only other thing I'd point out here, let's add a line here. I see an inverse head and shoulders looking at it from this chart. If I put a line right here, that's a neckline. Here's your left shoulder right here. We'll just draw it with circles real quick. Left shoulder, head, and your right shoulder. So that's a pretty nice looking, pretty symmetrical inverse head and shoulders bottoming pattern. And to gauge how far a head and shoulders pattern will go, you take the distance of the farthest distance from the head to the neckline, and then you add that on to where it breaks out. And you can see how that projects almost to that next target I have. So this one over time probably has a little more room to run. However, look at this move from the bottom of the right shoulder. It hasn't taken a breather, and it's at resistance. So I think a nice scenario for IPL would be a pullback to around this level. I see some horizontal support there, possibly a back test of the neckline. The downtrend line, but I like this level here. That would be one area to pull back to the $25 level. maybe needs to consolidate sideways for a while and then boom, punch up through there. One thing I like about pipelines, on a lot of pipelines, they're paid by volume moving through the pipeline, not prices of oil or natural gas or whatever they're putting through there. So a lot of people get that confused and sell those, and there's the whole baby gets thrown out with the bathwater thing. Now you have to look at the fundamentals of each and every company. I haven't done that with Interpipeline, but there's a nice dividend yield of 5.8%. PPL, Pembina, here's another pipeline company. Nice run, nice breakout, downtrend line. I put this this near-term downtrend to watch. So, I wouldn't take it here because we're at pretty formidable. I would say on a scale 1 to 5, this is about a 4, a good 4 as far as resistance, and that is at 36.11ish. We have 1, 2, 3, 4, and then 1 from above. That's 5, 6, 7. Numerous reactions. So very significant level. It needs to clear. So to go long here, in my opinion, is contrary to trading. You don't buy at resistance. You wait for a breakout. If you're super bullish and you think the stock's going to break out and you want to get ahead of it just in case it gaps up, sure, go ahead. It's not what I would do. I would wait for the breakout. But here's an uptrend line you can watch as well that appears to be forming. A break of this uptrend line will probably bring this thing in. And this would be my ideal scenario to see this recent run up here. You have the stock digest and work off some of these overbought conditions, pull back in, maybe back test the line here, the trend line at lower levels, somewhere around here, and then punch up, get on through that resistance and hit this next target I have here, and then ultimately I have a target of about 43.50-ish on that one, and 5.35% dividend yield, not bad. SJR, Shaw Communications, is a bearish chart, doesn't look good to me. I wouldn't touch that one. I don't see any reason to buy that one. And NATO, National Bank of Canada, here's another bank stock. And again, the theme is, like I said, so many stocks at resistance after tremendous runs. This is in just a period of a month or so, it's a bank stock and it went up 27%. It's a little too much too fast. It already did pull back, so it alleviated some of those overbought conditions, and it's back up to where it was following that run. However, you can see the RSI is not keeping up. The RSI and the MACD are diverging, and whether they power on through, which is possible, sometimes you'll see this potential divergence, and the stock goes on to punch up through that level. But most importantly, that 4470-ish level, that's a pretty big resistance level. And above that, I have a minor resistance level at 4530 it needs to take out. If and when that happens, then you're good to the stock looks good up to about this $50 level. A little bit of a level right there around 4630. And let's take a look at the weekly chart. Yeah, it's taking that out, so it looks good, and this is what I'm saying. These breakouts look good, and they could continue. 4.8% dividend yield. So I don't know. There's probably some more I wanted to cover, but this video is going on long enough. I can sit here and draw these all day long. They're just nice looking patterns, and some of these need more work. That's the only thing. We have a lot of these stocks are still at or just below key resistance, like in the case of CI Financial. It needs to take out this downtrend line. If and when that does, you can see the horizontal resistance zone here, next resistance up there. But we did have a divergent low. So Canada is looking good. And again, my thoughts are maybe a little more sideways to downside action in the near term. It would actually be healthy for the charts, constructive, and then power on up. But if not, there are quite a few that have broken out, and maybe those bull flags continue to play out. So there's the charts and there's the levels. And as I have time, I'll go through all the components of EWC, and any standout candidates I'll go ahead and put a static chart up on with some notes in the trading room. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed.